Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome back everybody, let's take a look again on the euro currency. So last week we've got really epic shifts in the market sentiment, and actually there were reasons for that, especially not even based on the statements from the Fed Reserve, but mostly from the European Central Bank and from the data that we have got later in the week. I mean consumption expenditures, gross domestic product results and so on. So balance has changed drastically. We have actually dedicated our weekly report to this subject, and we have shown really reasons why we do not expect any more rate change from the European Central Bank, and that currently already the chances based on the futures market that the central bank will change the rate already has dropped significantly. But based on the background and results of some statistics from the economy, we suggest that hard hits will happen. Meantime, we also would like to uncover what stand behind really positive numbers of the gross domestic product and some other positive numbers that you will not see on the TV. And we have taken a look at the bits, some specific indicators that maybe will not have some decisive meaning, but they are clearly show first signs of the big problems in the United States economy. So currently these problems are coming on the surface. If previously they were hidden somewhere deep inside of the economy processes and the performance of the companies and somewhere, but now they start appearing in the statistics, and this makes us think that situation also in the United States hardly will be very good, and we would not exclude and actually expect another spiral in inflation. Tomorrow we also will talk about this in our gold report, where we will consider oil prices and explain why the current situation on the oil market unavoidably lead to rising of the inflation very soon. So, and additionally, the overall actually deteriorating of the situation in the banking sector, in the production, in the manufacturing in the United States, unavoidably leads to the crisis. And any crisis suggests demand for United States dollar. This is the paradox of our time. And as worse United States feels, as more demand for the dollar stands. It's just because dollar not just the domestic currency of the United States, but also it's global currency. So on these two factors, we suggest that the balance between the euro currency and the United States dollar will start changing. Maybe it's already changing in favor of the United States dollar, and it's too early to bury the United States dollar. So we really could be we could see the rally on the dollar this year. So that's why the question from technical point of view, raising the questions on whether we have to or should resurrect the target. So everybody remember probably the target of the 19 even below the parity. And this target is still valid because it's of the high time frame. It's not erased, because all this performance that we see currently on the daily chart, on the monthly chart, this is just minor pullback in terms of the target that we have specified. And traders start asking whether this might be some start of the moving to the 19 even. Well, based on the current fundamental background, we think that nothing is impossible. So everything could happen, and if we're correct in our suggestion on the fundamental background that it's changing, and we're correct on the direction of these changes, it really might be that retracement is over and market could keep going lower. We will see. But currently it's too few signs pointing on that, and it's just looked like the pullback from the strong resistance level, because monthly trend still stands bullish. On the weekly chart, trend still stands bullish, and we should treat it just like as a pullback from the confluence from a technical point of view. Although fundamental picture has changed, and I'm not exclude that very soon we will get downward continuation. But we should go step by step. Currently, we would like to use this significant impulse that we have on Friday, and in general in the previous weeks was very strong downside impulse. That's why we start from it and trying to identify the level where we could take the short position, trying to ride on this impulse to some target, and then we will see what to do next. So currently market shows reasonable bounce up from the oversold area. It's also, by the way, the 50% support. I did not have it on this chart, but it stands right there. So here we have the bounce up from the support area, some kind of the stretch pattern. And this bounce or standing somewhere in this area should last for maybe 1-2 sessions more, just to market finally abandon this oversold level. So on the 4-hour time frame chart, we already talked about the possible target, which stands around 108.85, which agrees with the 618 support on the daily chart, 108.80 right there. And now we need to identify the level where it makes sense to take the position. Previously we said that it's really lots of options how to enter the trade if you would like to. First of all, most simple way is to split your position and take minor part at both levels. First it's 10.25, next one 10.70 if it will show the pullback. Second is more professional, is you could try to catch the precise reversal. If you have enough skills, experience, so you for example could wait for confluence, for example, if you're sure that will be reversal right there. And third way is called the Jordan Apple minor sweep entry, is you take in position when the retracement already will happen. So when the market already will start continuation downward action, you're trying to jump in on some minor pullback. So the three ways of the possible entry. Currently on the 4-hour time frame chart, the one tool that could let us to estimate the possible retracement target is a harmonic swing, because on the here we don't have any ABCDs or something of that sort. So we use just harmonic swing that point precisely on the 10.73 area. It's a confluence level. On the hourly chart, we have just one ABCD pattern. This I suspect some kind of the COP maybe. OP stands around 10.82. Well, in general, it's very close, just 10 pips difference to the confluence on the 4-hour time frame chart, and it would be nice if we'll get it somewhere in this level. So if market will show this action right to the OP, that might be the entry area. That looks interesting because it will be confluence resistance, agreement resistance. So it's relatively safe to consider taking the short position if, of course, we will not get some straightforward upward candle. So it's if action will be more or less gradual. So that's our suggestion what to do. If somehow market will not reach this level, start dropping further right from here, well, in this case we will probably follow the third method of the entry. So market will start downward continuation, we will try to take position on some minor pullback. So that's the things that we intend to consider in the coming week. In the current moment, since we have clear bearish context, we do not consider any new long position by far.